All sorts of indices, the realty index, the auto index, some parts of pharma, small cap, mid cap, everything is afire. There is a massive broad based rally happening on the Lal Street. Are you comfortable with such valuations, or are there pockets of froth that you are avoiding?
So, if you see the markets are characterized by two animals, the bull and the bear. So, very frankly, if you have an animal representative of a market, the spirits will also be very animal. So, in this sort of background, you will always find that it will not be an orderly movement of the market in either direction. In our particular case, Indian markets in particular, what has also happened is that, though belated, Indian retail investors have woken up to equity as a very attractive asset class. That is very, I will say, glaringly getting represented in the SIP numbers, which have kept on growing over the years. And what you see in the SIPs as an institutional number is also getting reflected in terms of the demat accounts that are getting opened. We now have close to 15 crore demat accounts, which are, sorry, 1.5 million, 15 million demat accounts which are operative in the country. And this number has actually increased quite substantially. Indian retail investors will warm up to the small and mid caps more easily than they would to large cap stocks, because these price movement in the small and mid caps are very you can say sharp, and therefore that is something that excites investors, because they do not look at the value of what they are buying, they look at the price of what they are buying.
क्या बात है?
In that sort of background, there is always a possibility of some froth being developed in the market. But having said that, if you go back to the entire history of the equity markets, there will never be a situation where all the stocks will be trading at their high, or all the stocks will be trading at their lows. You will always have opportunities in every market. In this market also, while there is a froth in certain sections, you will have to look for opportunities, and these opportunities are presenting themselves. You very rightly actually hinted at the possibility of some opportunities in the market because of the cyclicality of the sectors which are now participating in the market. Look at, for example, the infrastructure stocks. For almost 10 years, there was no movement in the infrastructure stocks, and now all of them are moving in as a pack. Look at public sector banks. For so many years, they were nowhere among the contenders for the fund managers' attention. Now, public sector banks are participating. IT, which was a darling of the market, is now so sort of ignored, and there is so much of apprehension around IT. So the cyclical nature of the sectoral participation in the market will keep on giving you opportunities, and therefore there is still a lot of merit in active management of money, where you need to keep moving money from maybe one sector to the other, or from one set of stocks to the other set of stocks.